Hey everybody, Chris here. Welcome. We're going to be talking crypto taxes. It's going to be so exciting. This is important stuff, guys. If you're trading cryptocurrencies, you got to be aware of what tax situations are. So we're going to go over that. We got lots of things to cover, but I'm going to keep it simple because that's what I do. I keep things simple for you guys, right? And I'm going to show you a few tools that you can use. And yeah, I know it's going to be a pain in the ass, but it's going to pay off in the long run. And it's something that you can then use year after year after year once you get it set up, because this is how I do it. Because what you get, and I'll show you examples of what you get from exchanges and other things, and it's just, it's not clear, and it's not like there's a clear, good way to do it. So I'm going to show you all of that. And then once we get through all of this, right, I'm going to show you a bunch of stuff here, right? And when we get through it all, I will go through the chat and answer questions. And then we'll look at the charts and everything else that's going on in crypto, because it was a good day today. We had good trading today, and that's always a good thing, which means profits. And what happens if you have crypto profits? You may have to pay taxes. That's right. Now, everything I'm going to say here, everything I'm going to say is not financial advice. I am not a tax advisor. I am not a financial advisor. But I've been doing taxes for a while. And for the past few years, a lot of crypto stuff, right? And so I figured it out how to best work on it. And we're going to go over that. Okay? So any questions you ask me, I will respond as education and entertainment, but not as financial advice and not as tax advice. If you have a real complicated tax situation, and I may get some questions on that, you go talk to a tax advisor, because that's going to be on you. And all of this that I'm going to be showing you is still going to be on you, because most of this stuff that you're going to have here is going to be in the background. And then mostly it's going to be used only if you get audited, right? Rumor is the IRS has added 87,000 new agents for this year. And what do you think they're going to be looking for? The crypto guys, right? The crypto. That's what I think. So the better your records are, the better off you will be, not only in getting your taxes right, but then if by some chance you end up being audited, you show them this information, they're going to be like, now there's somebody who knows what they're doing. I'm saying. And then there's one other thing too, and why we are doing this in December and not in April, right? Because in the United States, and this is all based in the United States, in the United States, you generally don't have to pay your taxes until April 15th. Unless you're getting a big return, and then you want to get that right in early March, late February, as soon as you can, right? You want to get that return back. But if you have to pay, you wait until April 15th, stretch it out as long as you can. And yeah, you can delay and you can do all that stuff too. Well, shouldn't need to do that. But some of you understand may have some difficult tax obligations for some other reasons outside of crypto, and you're going to have to deal with that. So that's what we're talking about here, is that. Now, again, why are we doing it in December? Because you now have half a month left here to figure out whether you're going to have capital gains or not. Capital gains, which means you have to pay. If you sold crypto during the year so far, well, is all of that crypto been positive, meaning in the green, and you made profits? Is it all negative, meaning losses? Or is it some of one, some of the other? You still have these next 17 days here to figure out whether you want to sell any more crypto for either a profit or a loss to even out your capital gains if you think that's important to you. And I will tell you why that might not be a good idea. So let's get into it. I'm going to drop down here in the corner and I'll be hanging out down here. And we're going to go through not reporting taxes because we're not reporting yet, but we're going to be talking about how to think about tax implications with crypto and then how you can record your crypto, because that's the most important thing. Because all of this stuff that you read here, and I'm going to use both CoinLedger and Coinly because they have real good information online, even though I don't use CoinLedger or Coinly. I take care of it myself on my own spreadsheets because I'm a spreadsheet guy. And I'll show you my spreadsheets too. So we'll start with that because that's the key, right? Is record keeping. It's record keeping because if you rely on exchanges like Ariel says here, he just has Coinbase, right? So he's only used Coinbase. Well, there might be a reason why you still want to put together a spreadsheet. Depending on whether it's just still sitting on Coinbase, do you have other crypto as well besides just Doge, or are you only Doge and only Coinbase? Maybe that's the case. But here's what I do. What I do is I make a spreadsheet, and I've shown you guys the spreadsheet before, and I don't know whether you've been on one of my live streams where I've showed this before. This is not my personal spreadsheet. This is the spreadsheet for the Kriss DCA portfolio, which is shown here in this coin market cap portfolio that I created here, just as so we can visualize how that portfolio is doing, of which I put in $10,000. We started in July, and we were buying cryptocurrency through July, August, and September for this portfolio. Now, personally, I have to, right, add this in with my own personal portfolio list, because when we start selling some of this crypto at the top of the bull market, right, when we want to make all those profits, guess who has to pay the tax on it? It's not going to be me. No, it's not going to be you. It is me. I have to pay the taxes on the profits too. So we have to figure that in with how much Dogecoin I'm going to give out to you guys, which comes to think of it. When you receive that Dogecoin, right, that I'm going to give out to you guys that are members of my channel, do you have to pay taxes on that? Let's think about that. Anyway, this is the example I'm going to use. This is the spreadsheet that I use. And I've got a big ass long spreadsheet of my own personal cryptos that I keep track of because it's the only way I can manage it. But we started buying Dogecoin on July 14th. And we did DCAs of like $33, $50, et cetera, et cetera, et cetera, right? And we were buying Dogecoin between 7/14 and October 9th. So each night after I bought crypto, I logged it onto this spreadsheet. So I know exactly when I bought crypto, what the date was, which crypto it was, how many I bought, what the price was at that time, because that's very important, what the price was when you bought it, and what my cost was. All very important. And I did that with Dogecoin. I did it with Jasmy. I did it with Bitcoin. Did it with XRP, Matic, ETH, Algorand, Litecoin, Sheeb, Render, right? So I got all these, right? So these are all of the coins that we have in this portfolio, right? And I've logged them all on here as I was buying them. Now, if you don't have a spreadsheet and you want to start something like this, you can go to your exchanges and you can relook at all of your purchases because your exchanges should have that information under your profile. I think on Coinbase, you go into the taxes area and you can see your purchases, or somewhere else to see all your purchases. It depends on which exchange you're using. I highly advise doing this. Because let's say I'm going to sell 10,000 Dogecoin, right? I'm going to sell 10,000 Dogecoin. Okay. Well, how do I know whether that's in profit or whether that's in a loss? So what I do is I say, okay, I'm going to sell 10,000 Dogecoin. I use the first in, last out method. First in, last out. So the earliest Dogecoin I bought is going to be the first that sells. You can set it up in one of two ways. You can have the highest to lowest, or you can have the first to the last. I like using first to last because that sequential thing makes sense to me. And that's how I log it. Yes, bull run, taxes. This is the epic taxes live stream for crypto. Very important, blah, blah, blah. Yeah. Anyway, so if I'm going to sell 10,000 Dogecoin, let's say now at whatever the price is now, 9.64 cents. So I'm going to log this on here. And I'm going to say, okay, let's go down. Let's go to 10,000. 10,000 Dogecoin gets us through. All of these Doge will be the first ones sold, right? And so I can, let's call that green color. I'm going to sell that. And then we're going to sell some of the next piece to get to 10,000. So those are the ones that are going to sell. And so we say, well, what's the current price? The current price is 0.0965, right? And actually what I do is I just copy this from here because I have this already set up. Control C. Control V. 0.09. This was earlier. I was setting this up. 0.965. Current price. If I sold it right now, right? So this first row of Dogecoin would get me $13.09 of profit. And I would just take this. And if you guys don't use spreadsheets, I highly recommend you do it because it is definitely worth keeping track of all this stuff. And I know it's a pain in the ass, but you do that, do that, do that, do that, do that. Right. So how many Dogecoin was that we sold? That was 9506. So what if I sold 10,000, that means this next batch of them would be 494 Dogecoin. So let me just write that down, 494. So I can figure that out. Anyway, so, and then what I'll actually end up having to do is insert a new row, right? Because we're going to split this Dogecoin to 722.80. Because I'm going to have to split it. That's 722.80 minus 494. It's going to be that. And this is going to be 494. So that's going to split it up. And that's going to be, sorry, I have to give it a little equals sum. All right. So that's how we clean that up. Control C, Control V. All right, so there's our 10,000 Dogecoin sold. And all of this now will all be sold. So I'll color that green. That is all sold, right? So that's how I keep track of it. And so with that, I now know that I made a profit of $236 on this Dogecoin, on that 10,000 Dogecoin that I sold, and it's all tracked. Eventually, as you buy more, you add more down at the bottom because I do first in, last out. So I would add more at the bottom if I continued buying, but this would be sold and it would be tracked. And you can change these colors to be red and green if you want for profit or loss. These would all be green because they're all profit, and they would all be green, and you can add all of that up. So this is what I do for keeping track of my cryptocurrencies. And with that, I'm able to tell at any time, because I keep this all up to date, whether I'm in profit or loss for the year. Right now, for the whole year, I'm in profit. Right? I did some swing trading earlier this year, and I'm in profit. And I have to decide by the end of the year, because I do have a couple of of my crypto coins that are still in the red. My optimism is still in the red. My loop ring is still in the red. And I still have some old Harmony One that's still in the red. I could sell those now to try and lessen my tax liability. This is how you know that, because you have to see where you are throughout the year. So that's how I keep track. Unrealized gains, you don't have to worry about. So you don't have to worry about unrealized gains yet. I think there's some on Capitol Hill, like Elizabeth Warren, that wants to collect taxes on unrealized gains. That's never going to pass because that's ridiculous. Okay, so we'll start with that. That is this. It's a spreadsheet. I know some of you guys are like, oh, spreadsheet. I can't do spreadsheets. But somehow you have to keep track of your crypto. Because what do you get at the end of the year? Well, you get, like, here's what Robinhood will send you. Let me get that. Robinhood. So here's Robinhood, right? So this is my 2021 1099 form that Robinhood sent me. And it shows me that I have a net gain of $11,698 from Robinhood on short-term sales. I have zero on long-term because I didn't do any, in 2021, I didn't do any crypto sales for any long-term gains because I didn't hold crypto for at least a year yet in 2021. I did in 2022, and I'll show you that. But in 2021, I didn't. And what Robinhood sends me are all of my sales. So I sold ETH on January 11th at a loss of $1,173. But then I had these gains on ETH because I was swing trading ETH. So I had losses and gains, and I ended up at a total for the year on ETH down $1,400. But here's all my Doge. These are all my Doge that I sold, according to Robinhood, just on the Robinhood platform. And they show you your negatives and positives. And for the year of 2021, all of my Doge trades were in a profit of $13,000. So I made $13,000 trading Dogecoin because I was doing some swing trading, crazy as it was, but I was doing it. And they keep pretty good track of all of this stuff. And so my total for 2021 was $11,698 in profit on a short-term gain, and I had to pay short-term capital gains tax on that $11,698. If Robinhood was the only platform I used. But it wasn't, because I also had stuff on Webull. I also had stuff on Binance US. And I eventually had some stuff on Coinbase as well. So I was using 4 different exchanges. By having 4 different exchanges, how would I be able to keep track if some exchanges give you good information and some don't? So this is what Robinhood sent. That makes sense. Okay. So they kind of summed it all up for you, all short term. That's it. If that's all you have, you've only traded on Robinhood, you haven't traded anywhere else, and you haven't done anything else other than buy and sell, then this works for you. That's all you'll need. They'll send you the 1099 form, and you will go and you'll do your 8949 form. So here's your 8949 form. You got to know an 8949 form. Sales and other dispositions of capital assets. So this is mine from 2021. Here's my Doge, some more Doge. I did it in blocks, and then show my gains, losses, etc. That were not reported on Form 1099. So this is other places that I had Dogecoin sales and These were mostly from Binance US, because on Binance US, here's what they sent me. This, a CSV form. They didn't send me a nice 1099 form. Binance US doesn't do that. They send you this. which is a summary of all of your trades, both buying and selling. And it was like, it was impossible. It was all sequential. And then I ended up having to like copy it over and reformat it and all this stuff. And I was just like, it was a pain. But I had to go through and I had to figure it out from this and then put it on this 8949 form here, because these are amounts that weren't, that I didn't get on 1099s. That was a pain. So anyway, this ended up being a loss of about 9,670, which I then subtracted from the other 11,000 of gain that I had. And then, so that made my only gain of 2021 was about 2,000. So it ended up, I didn't have a huge gain for 2021. I still own a lot of that crypto from back then, but that's what I did. So where does that go? That goes on a Schedule D. So here's my 2022 Schedule D I wanted to show you, because I have both short-term, which is part one here on Schedule D. There's short-term capital gains, and then down here's long-term capital gains. In 2022, I ended up with a loss of $25,000 on short-term, but I had a gain of $39,000 on long-term. These are crypto that I held for over a year and then sold for profit. Well, a combination. There was some loss in there, but more profit. And so I ended up with a sort of a net gain on capital gains up about $15,000, let's say. Okay. So that's $15,000 total gain for the year. And most of it was in long term, so I pay less taxes on that. And I will show you that as well. So this just sets the table, right, for what's going to happen in February or April, whenever you're going to be doing your taxes in the United States. This is the stuff you need to have ready to do that. And you need to have a way of adding it all up. I said, like, I mean, if you only traded on Robinhood and you didn't move anything to a wallet, you didn't transfer anything, and you only traded on Robinhood, you held it on Robinhood, you bought and sold, and that's all you did, it's going to be a lot easier for you. But if you start getting into this other stuff that I'm about to talk about, well, then that's a different story. So let's get started. Let's get started. And I'm going to use Dogecoin as an example because we like Doge, right? On this channel, we talk a lot about Doge. But all you have to do when I say Dogecoin, just think in your mind crypto, because this could be any crypto, okay? So how is crypto taxed? Crypto is taxed in two ways. Some of it is income. There might be some ways, not only with Dogecoin, but other crypto, where you have to pay an income tax on crypto that you receive. Okay. Then you can be taxed on capital gains. That's when you sell, when you swap, when you spend, and sometimes when you gift. Not all the times, but sometimes. Okay. Capital gains tax. Selling, trading, spending, and gifting sometimes depends on where you live, depends on the amount, and also depends on what it's for, right? So that's easy. Capital gains. You will pay tax on Dogecoin when you sell Dogecoin for fiat currency, right? So on Robinhood, Coinbase, whatever platform, right? You sell Dogecoin for a profit, like we just showed here on this, right? We made this much profit of $236. We have to pay taxes on that $236. This is how it works. Uncle Sam's going to take their piece. So if you think you've made $1 million, right, and you sell, right, all this Dogecoin, you got millions of Dogecoin, you're going to have $1 million of profit, right? Don't go out and buy $1 million house, because you actually can only buy like a $650,000 house, because the rest of it is going to be taxes that you're going to have to pay. So be careful out there. That's all I'm saying. Be careful out there. So as I showed, capital gains is going to be a sum of your gains and your losses through your sales throughout the year. Okay? Both in the short term and the long term. So you have to keep track of that. So if you sold your Dogecoin for a higher amount than you bought it for, you have a capital gain. Meanwhile, if your Doge had dropped in price from when you bought it, you have a capital loss. And then you offset them. Okay? You offset them. The difference between what you bought your crypto for and what you sold it for. It's a gain or a loss. And you've got to figure out how to keep track of it. And again, this is for the purposes for not only making sure that your tax forms are filled out, but also in case you get audited. In case you get audited. You can't just shrug your shoulders and say, "Oh, I didn't know." You should know. You should know. So, if you didn't actually sell your Dogecoin, but you did something else with it, let's say you traded it, right? You traded it. That means you swapped it, right? You did a Doge for Bitcoin direct swap. Guess what? That's a taxable event. You actually sold the Dogecoin and then you bought the Bitcoin, is what you did. That Dogecoin sale is taxable, and now you have new Bitcoin that you bought at a certain price. So then you got to go onto your spreadsheet, right? If you did a swap and you go to your Bitcoin area, and then you have to add in a new purchase of Bitcoin, right? You would add that in because you just bought Bitcoin. If I took that, that 10,000 Doge here, right? And then I bought Bitcoin, I would put it here as a new purchase. Even though you didn't actually purchase it, you traded one crypto for another. That's the same in terms of taxes as selling and then buying. That's how the tax code looks at it. Okay, so we got that. Spending it. Guess what? Last year, I bought this cyber whistle. This great, cool cyber whistle here from Tesla, right? And I sent them Dogecoin for this. Guess what? That is taxable. That's right. The Dogecoin that I used to buy this cyber whistle, that amount of Dogecoin, it's the same as selling it. So you have to pay a tax on the difference of the price from when you bought it to when you used it to purchase something. Because cryptocurrency in the US tax code is not really a currency. It's a security or a commodity. Doesn't matter. It's taxed. That's a pain if you're going to be using Dogecoin to buy lots of things. You got to keep track of it somehow. It's the same as selling. So what I did was I went on my spreadsheet. So here's my spreadsheet. And here I am at this point in time. And I have to add a row of a sale because I then sold that Dogecoin. And I have to log what was the price of Dogecoin when I made that purchase, because it's the same as a sale and you're taxed on it. Unfortunately, that's the way it is. That's the way it is. Makes you wonder, does cryptocurrency really work as a true method of currency? I mean, you can cut a lot of corners with it, especially if you're paying someone like overseas, but it's taxable. Unfortunately, that is the way it is. Okay. All right. Income tax. Yes, in crypto, there are taxable events. Taxable events would be if someone pays you in Dogecoin, right? So you do some graphics work for them, right? And you charge them, 10,000 Dogecoin, right? Because you think that effort that you had was worth, however many $100 it was. And somebody pays you in Dogecoin instead of dollars or fiat currency. You have to claim that as income in Dogecoin. And what you would do is you would go to your spreadsheet, you would open a new line here at the bottom because you just got paid in Dogecoin, and you have to mark that on there that you just made that Dogecoin as payment. And what was the price of the Dogecoin when you received it? That tells you what the value was of that for taxes for income, but it also gives you your cost basis for when you eventually sell that Dogecoin. You got to keep track of it somewhere. So there's that. I know it's not that you guys just want to hear me talking about when is Dogecoin going to go to the moon and when are we going to make $1 million. But unfortunately, we have to do this. If you're mining Dogecoin and you're receiving Dogecoin, you're taxed on it. If you're receiving crypto airdrops, yes. If you were just received those Jito airdrops last week, right? You're like, woohoo, free. It's free. Well, you have to pay a tax on it. You have to pay a tax on airdrops. You don't get it for free. Yes, you got the crypto for free, but it's counted as income in the tax code. And so you have to pay taxes on that income. Sorry, guys. How about liquidity pool tokens or interest or staking? Right. If you're staking, let's say you're staking Ethereum, right? And then every month or every few weeks, you receive more Ethereum. Guess what? It's taxable, guys. It's taxable. You got to keep track of that Ethereum you're getting as your staking rewards. What's the price of that Ethereum when you received it? And you got to put it on the spreadsheet. That's the best way to keep track of it. It's the best way to keep track of it. You go down to your Ethereum, you open a new line, because I just received some Ethereum as based on staking, and you put it in here, and because you got to keep track of it. You might get audited. If you have a spreadsheet like this that has everything in it, auditor's done. There's no questions. You have it all there. So there's that. What else? What else? Getting paid, mining, airdrops, covered that. Now, when don't you pay? So when you buy cryptocurrency, right, you don't have to pay taxes, right? You're using your fiat money, right? You put a bunch of fiat money on Coinbase or Robinhood, right? You transferred it on there, and then you make a purchase for Dogecoin. That's not taxed. There's no tax for that. Thank God, right? They're not taxing that yet. Just holding Dogecoin. There's no such thing as unrealized gains. You can hold Dogecoin for years. Its value can go up millions of dollars, and you don't have to pay tax on it until you sell. Or these other things we talked about. Donating to charity. Yes, you can do donations to a charity in Dogecoin, and then it's a gift that is not taxed. And then if you're moving Dogecoin between wallets, that's right. If you've got Dogecoin on Robinhood and you want to move it to your ledger, let's say a hardware device like this, transferring Dogecoin or any cryptocurrency from one to another, it can be from exchange or from one wallet to another wallet, that's all yours, no tax. You do not have to pay tax on that. It's just a transfer. So no taxes on that. All right. That's kind of the overview. Now we'll go through a few scenarios, and then I'll get to your stuff in the chat, okay? scenarios. Again, everything's a capital gains. It's a short-term or long-term capital gains when you sell. That's the easiest thing to do. Did you hold that for a year or not? You won't know unless you keep track of when I bought this Dogecoin. Now, this Dogecoin that I bought on July 14th, 2023, I don't want to sell that in less than 12 months. I want to hold it at least 12 months because my tax liability in the United States is going to be less. And in some other countries, it's going to be zero if you hold it for a year, which is awesome. You hold crypto for a year, like in Germany, and then you sell it, there's no capital gains. But in the United States, there is a capital gains. It just is a little less. Okay, so I'll get to your questions in just a minute. I'm almost done, almost there. So here's some scenarios. I sold my Dogecoin for profit. So this is Steven. He buys $1,000 of Dogecoin. Let's say it's at 5 cents. Price of Dogecoin was 5 cents. Okay. And then the value of his holdings goes up to $2,000. So that means the price of Dogecoin went from 5 cents to 10 cents, right? He doubled, 2x. That's pretty good. He then sells all of his Dogecoin. Boo, boo. But that's okay. Take some profits. Sell your Dogecoin. Steven incurs $1,000 of capital gains. That's what it is. And it goes onto that form, right? The 8949 form, right? Where you show it, and then it goes onto your Schedule D, either as a short term or a long term. If you don't know what I'm talking about and you just joined and you weren't here, you can go back later in this video and you can see where I showed the Schedule D form, the 8949 form, and all of that, because I already showed that. All right, so now, did you hold it longer or shorter than 12 months? If it's long-term capital gains tax, I mean you bought that Dogecoin more than 12 months ago until you sold it or spent it, then you're going to be paying somewhere between 0 and 20%. That's going to depend on the state you live in, because some states treat it differently, right? Because you're going to have not only your federal tax, but you got your state taxes too. Yes, the state wants their little chunk too. So you got to combine those together. The zero, there's not going to be any zero here in the United States. Zero is going to be some other countries. United States, let's call it 20%. Short-term capital gains could be up to 37% between your federal and your state taxes. That means over a third is wiped out. That's why I gave that example of that $1 million. You have $1 million of profit in Dogecoin, let's say, when you sell it, and you think you're a millionaire. Well, guess what? You're going to pay $370,000 in taxes if you held it for less than a year. And all of that gain, that $1 million gain, was done by holding that Doge less than a year. So it makes sense to wait at least a year before you sell your crypto, because there's a big difference between short-term and long-term. I'll tell you that. That's a big difference. So my plan is everything that I bought in 2023, I'm not selling until 2025 because I don't want the short term. That's my plan. So what happens if you sell for a loss? So there's Kaylin, right? Kaylin has $5,000 in capital gains for the year, right? So she's already been keeping track of her sales, right? And right now she thinks near the end of the year, she already has $5,000 in gains, and she doesn't want to pay taxes on that. Meanwhile, she's got this Dogecoin sitting there that she bought when Dogecoin used to be really high. And she figures out she can sell some of that Dogecoin and incur a $5,000 loss on that sale. And guess what? She can offset that by offsetting what she had in $5,000 of gains with that loss, and then zero it out. And she can do that right up till December 31st, which is why I'm doing this video today, the middle of December, so you can start planning if you want to do this. Because if you don't want to pay taxes on that $5,000 like Kaylin had here, you can sell something for a loss. And that is called tax loss harvesting right there, or tax gain harvesting, depending on which side you're on. That you can do that. And in cryptocurrency, there's no wash trade rules like you have on stocks. Like if she then wanted to rebuy her Dogecoin on January 1st, she could. And she can still claim that tax because cryptocurrency doesn't follow the same rules as stocks. If I tried to do that with Tesla stock and I sold Tesla stock, let's say on December 31st, like I guess this year it's going to be like the 29th or whatever, right? It's the Friday before. I have to wait so many days before I can rebuy that Tesla stock so that I'm outside of that wash trade window. And I don't remember what that number is, but so there's that. So you can think about that, whether you want to offset it. The problem is though, when you do that is when you rebuy that Dogecoin, you reset your cost basis. So let's say Kaylin had to sell Dogecoin that she bought at 20 cents, right? And she sold it for 10 cents. Now she wants to rebuy that Dogecoin back. She's buying it at 10 cents. And then all the gains from that 10-cent point on, then she's going to have to pay taxes on that eventually when she sells it. Or place some of these other gains if she has other crypto, which she has at a loss. That's your choice if you want to do that to help ease any tax burden you might have this year, and you just kick the can down the road, and maybe you then have a tax burden later. So there's that. All right, let's look at this one. Sean, he buys $100 of Dogecoin. The value goes up to 300. Woo, what, 4 cents to 12 cents, right? Awesome. And then he trades his Dogecoin for basketball game tickets. He incurs $200 of capital gains because that is the same as a sale. Spending Dogecoin and getting something back, like my Tesla Cyber Whistle. I get that Cyber Whistle back. That's a sale. You have capital gains on that. You earn Dogecoin through mining, right? That is income. And you have to claim it on line 21 on Form 1040. So that's a bunch of stuff that I went through. Again, this video will be on my YouTube channel. You can come back and you can look at it again and again and again and replay it to try and figure out what was Kriss talking about. Because until you start sitting down doing your own taxes, you're going to be like, what? Oh, I don't know what to do. That's why this is the epic crypto tax live stream covering, well, this is just the basics. There's a lot more detail in some of these different things, but there you go. Okay. So with that, and we may refer back as we go into the chat, answer some questions. We'll look at how Dogecoin is doing right now, 9.64 cents. Sometime in the future, somebody's going to be looking back at this video and they're going to say, oh, Dogecoin was only 9 cents. And they're going to be like, yep, Dogecoin was only 9 cents here in December of 2023 when we're talking about crypto taxes. Awesome. All right. We have a super chat from Caffeine Nights. Thank you so much for the super chat. What if I use a DEX and swap for USDC? Yes. You used a decentralized exchange and you swap for USDC. Whatever crypto that is, it's the same as a sale. And you have to put it on your spreadsheet or in some manner that you can keep track of it. You got to do it. And so you have to know what was the price when you bought whatever that crypto was on that decentralized exchange versus what the price was when you sold it. And you have to have some method of tracking that. But thanks for the question. Thank you for the super chat. I appreciate it. Appreciate it. So Ariel says, all my Dogecoin is on Coinbase. Taxes should be easy. As long as you didn't do any of that other stuff. Did you transfer any to another wallet? Coinbase won't know that. All Coinbase knows is if you buy and sell on their platform. That's all they know. As soon as you transfer something off that Coinbase platform, Coinbase doesn't know it exists anymore. So you can't rely on Coinbase to give you the right information on a 1099 form. So you have to be careful there. Okay. And Bull Run, although she's not here now, says, I'm going to make my tax guy do it for me. Well, the tax guy is going to ask you all of those questions that I just went over. And you got to give your tax guy something. I give my tax guy my spreadsheet, right? It's like, here it is. And then he does my taxes for me. But you got to give him the stuff. He's going to ask you, what crypto did you buy? When did you buy it? What was the price? Because he needs to know what the cost basis was. And then when you sold it, what was the price? Was it a profit or a loss? Unfortunately, that's the way it is. Rodrigo, wow, let's say a person bought crypto since 2019, never declared it, even though the portfolio has been in a loss. But if 2025, the portfolio becomes $1 million, who would you declare that? Well, if you just bought it in 2019, right? If you just buy it in 2019, it doesn't matter. You don't have to declare anything. You just have to have somewhere of a record of the crypto that you bought and what the price was. How many at what price? So then if you sold it in 2025 and you make $1 million, well, then you're going to pay taxes on that. So eventually when you get around to selling, you got to know what was the price and how many did you buy, even if it was back in 2019. If it was Doge, it was probably a crap ton of Doge because in 2019, Doge was much less than a penny. That would be awesome. Bull Run says, I'm going to find a way to not pay any taxes on my crypto profits. And the only way you can do it is to tax loss harvest, sell some for a loss to even that out. It's the only way to do it. You can't get around it any other way. So if you lose your crypto, right, a lost account, or you got scammed or hacked, the crypto is gone. You can't declare it as a loss. It's just gone. Unfortunately, that's the way it works. If the government deemed crypto as a commodity, will there still be taxes involved? Yes. Commodities are taxed just like securities. So yes, it is the same. So Hood for the win. Yeah, Rob, if you, again, just like Coinbase, right? If you're Robinhood and you've only bought and sold on Robinhood, you haven't moved anything, you haven't done anything else, then your 1099 you get from Robinhood is all you need to use to go right on your Schedule D, and you're good. Okay? It's highway robbery. Welcome to the United States of America. Who do you think pays for all of the crap going on in the country? It's the middle class. It's the lower to middle class. Because the upper class, right, are the ones that hire all the lawyers to find the loopholes in ways they don't have to pay taxes. And we end up having to pay all the taxes. That's just how it works. Didn't we get taxed 40% if we hold it under a year? Less if we hold it more. Yep. And that was that example there that I showed right there. long-term, short-term. So my goal is all the crypto that I bought this year, I'm not selling until 2025. Because I don't want to pay 37% in taxes between the federal and the state. I'd rather pay the 20. That's a lot of money. Just think if I made $1 million, right? That's the difference between 370,000 and 200,000. I'd like to keep that extra $170,000. Thank you. So yes, short-term capital gains tax held for less than a year versus long-term capital gains, typically less. Yep. Musty, how are you? Been a while. You made it. If the IRS wants my $2 gains, they can come get me. Awesome. $2. Jared, hi. I'm not sure if you win all of this I got in my, is anything over 10K taxable or it's anything? It's anything. It's anything. If you made $50, you have to put it on a form. So Schedule D, you just put it on there. Probably won't have much tax implication whatsoever at $50, but you put it on the Schedule D. 3 years in, 7 more to go before I think of selling anything. Musty is on the long range plan. I'd all gains in crypto taxable. Okay, yeah, we talked about that. Move to wallet that resides in a different country. Wherever the wallet is, it doesn't matter. It's not taxable, right? Like if a wallet, if it's a company that does a soft wallet and it's based out of, I don't know, Israel, right? Doesn't matter. It's not taxable. You're just moving crypto from one wallet to another. You're not selling it. If you sell it on exchange, it doesn't matter where that exchange is. It could be a Korean exchange or whatever. You still have to pay United States taxes. Wouldn't even let me transfer to my wallet. Yeah, maybe. Can I help you with taxes? This video has it all. All of the nuggets of wisdom are right here in this video. But I'll be happy to answer questions during live streams on taxes, but not the basic stuff that I just went over. So is a tax the same as fiat since it's a stable coin? Oh, you're talking about that USDC. Good question. Because USDC is still it's still a cryptocurrency. Well, actually, but the value of it is not going to change. It's still going to be $1, right? So a stable coin based at $1, whatever you do with it then, there's going to be no tax implication, because if you sell it for fiat, right? Because you want to take the fiat off and put it in your bank, right? That'll be zero tax on that because it's a stable coin. Or then you use that stable coin to go buy something else, that won't be taxed because you're just buying other crypto or buying anything else. So there's no tax because there's no change in value of the stable coin from when you sold the Doge, let's say, to USDC, you paid the tax on that sale. But once it's in USDC, it's a stable coin. Voice of Reason, thank you so much. Appreciate it. Glad to help in my own little corner of YouTube here. You know me, I like to keep things real and I like to keep things simple as possible. And I'm not all full of hype. I get excited about price changes like we see with Doge, and but I don't go too crazy with it. So coming from the voice of reason, I'll take that. Thank you so much. Curtis makes a good point. You can only claim $3,000 of a loss. So if you are in a position like, let's say like Steven here, and he buys $100,000 worth of Dogecoin, okay? he buys $100,000 worth of Dogecoin, right? And then the value, instead of appreciating, it goes down. And let's say it goes down by half. Let's say he bought it at 18 cents, and now it's at 9 cents, and he sells it, right? And so now it's only $50,000. He has a $50,000 loss on paper. But as Curtis points out, guess what? They don't let you claim a $50,000 loss. They only let you claim a maximum of $3,000 loss. And then that remaining loss can be rolled forward into future years. But if you make $50,000, oh, they tax you on all of that, right? But if you have a $50,000 loss, you cannot claim that entire $50,000 loss. Isn't the US government great? That's the way it is. That is the way it is. As Curtis says, they raised long-term capital gain from 15 to 20. I think the 20 is a combination of the federal and the state in terms of what CoinLedger put on this. That's what I think that 20 is. Again, this was made. This is not this year. So I don't know what the tax code is going to say for 2022 taxes that we fill out in 2023. I don't know what the numbers are going to be because they can change them. So take these numbers on this chart here as general numbers. 20%, again, state and federal together. And then short-term capital gains, 37% of state and federal together. Because you got to do both. A real pain. You've been watching since 2021. Thank you, Caffeine Nights. Appreciate it. Rodrigo, it is crazy. Yes. Caffeine Nights. Yes. Rage-inducing. IRS gets away with it. Should be illegal. All of that is true. But we have certain freedoms in the United States, being in this country, that not a lot of other countries get, and we have to pay for that. And like I said, it's mostly the middle class, lower middle class that is paying most of the taxes for the rest of the country. In my opinion, that's my opinion, that that's the way it is. Upper middle some, but the rich aren't paying all their taxes. They're paying enough. I mean, Elon Musk is, and he says it. He pays more taxes than most anybody. People think he's getting away with things. He's not. He's paying taxes. I believe him. But there's some other individuals, and I won't name them, that probably aren't. Hey, Curtis, wallet-to-wallet transaction considered selling, not as long as they're both your wallets. If you want to send something from a, let's say from a ledger, let's say to Trust Wallet, to have it on your phone, like a Trust Wallet, a soft wallet, that wallet-to-wallet transfer, it's not taxable because that's both still owned by you. It's not like you've sent it somewhere to somebody else's wallet. That would be different. Whether it's a gift, a tip, then it may be taxed, depending on what it is. But just transferring from one wallet to another, the only thing you pay is whatever that small transaction fee, which in Doge is practically nothing because Doge is so cheap to move around. You'll be paying less than a penny most times to move Doge from one wallet to another. So not taxable there. Okay. All right. Any other questions? You guys can put them in the chat. I can stick around for a little longer. What did we have today? We had the FOMC meeting. And with the FOMC meeting, Jerome Powell said, you know, we're just going to keep interest rates where they are. And next year, we're probably going to be lowering them. Well, what happened? Bitcoin went up. Boom. Bitcoin goes up. Rest of crypto goes up. That's pretty good. So, yeah, we're having a little retrace tonight. So some things are in the red, but other things like Cardano, look at Cardano, just big move up, very strong. Hedera had a big move up earlier. Now it's going sideways, but some others are retracing like Doge and Bitcoin a little bit. But yeah, Bitcoin went up to 43,400. Now it's down to 42.8. But yeah, just hanging out there. That's pretty good. The other cryptos I'm watching, VeChain up over 3 cents now. I'm looking forward to 20 cent VeChain. It could happen early 2025. That's my target. Look at Render back up over $4. We have Render in our Kriss DCA portfolio, which, by the way, look, it's at 53% profit now on this portfolio, which started at 0 in the middle of July when we started buying crypto. And look at that. It is up 53% now. And where is Render? Our Render is up 197% now. Look at that. 197%. Our average Render price is $1.45. That, my friends, is a 3x. It's a 3x in 3 months. Not too bad. Not too bad. Should have bought more. Toss is the one that got me to buy this, and he should have said, buy more, Kriss. Get more Render. That's pretty awesome. That's pretty awesome. And look at the Algorand. We bought it at 10 cents. It's now at 20 cents. Doubled. Doubled in price. And again, we were just buying this back in August. Where are cryptos going to go from here? I think they're still going to go up. We may have a little bumpy ride, but there's so many good things coming ahead. I think they're going to go up. But this Render, awesome. Awesome, awesome. So that is what is going on there. Bum, 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 bum. Yep, Joshua, my 12-cent prediction might happen. Isn't that going to be something? That would just be glorious. The end of December, to replay my video from the beginning of January of 2023 when I said Dogecoin was going to be 12 cents at the end of the year. That'll be awesome. We'll see whether that happens. Thanks, Curtis. Appreciate it. Again, we're just trying to keep it real here on this channel. Trying to keep it real, and glad to answer questions. Jared says, great info on taxes. Much thanks, and good luck to you all on your crypto adventures. And if you have sold crypto in the year 2023, just try and keep your records, get your records, go back to your exchanges, figure out your transactions. And I can't emphasize enough. I mean, a lot of people hate spreadsheets, but God, to have a spreadsheet like this where it's all here, just in case, it just makes things so much easier, especially if you're going to be holding for years, like we are with this. This thing's going to be held for, at least a year and a half. Not going to remember what all these transactions were, but here it is, all documented, all set to go. So as soon as we sell, we'll know exactly what the tax is going to be, or at least what the gains are, all from here. And yes, I'm going to pay the taxes. You guys aren't going to have to pay the taxes on this Kriss portfolio. I'll pay the taxes, but it's all going to be a long-term capital gains, not a short-term. And I'm still going to pay out the difference in Dogecoin to you guys. You guys, with your names in green there, that can use those fun little emojis, who joined my channel. And here are the members right there. You join the channel, and you too will get Dogecoin from me. And you won't have to pay tax on that Dogecoin to receive it. What you'll have to pay tax on is the difference in the cost of when I send you the Dogecoin to when you eventually sell it. That's going to be on you. So, how about that? I think Dogecoin's going to do very well. It's not going to be at 9 cents when we sell it or when I transfer it to you. Again, I'm not selling the Dogecoin. Again, I'm selling everything else, the Bitcoin, the Render, the Algo, ETH, XRP, Jasmy, Sheeb, Litecoin, and Matic. We'll sell all these, right? And then I'm going to transfer the Doge. Again, it's going to depend on the profits and what the profits are, because I'm splitting the profits with you guys, right? I'm going to split the profits with you guys. And that was my deal to prove a point in the summertime when I thought crypto was at its bottom. I mean, Bitcoin wasn't, because Bitcoin's bottom was almost a year ago. But most of these altcoins like Algorand was at its bottom in August. Because when Bitcoin was 15K, Algorand was 15 cents. Bitcoin went up to 30K. Algorand went down to 10 cents. They were going different directions. So we were buying this Algorand here at 10 cents, and now it's at 20 cents. It's doubled in price. And so I was so confident that I said, I'm going to set up this portfolio. We're going to buy this crypto, and then I'm going to sell it at the top of the bull market, and I'm going to share the profits with you guys. All you have to do is join my channel. So that was the deal. Kins, you're welcome. Rodrigo, you're welcome. And Curtis, as always, thank you so much. Hey, guys, I'm going to be on again Friday night late. We're going to do another late night Friday night live stream. So that should be fun. So look forward then. I'll probably do a video tomorrow to catch up on all the news from the past couple of days. Mostly Dogecoin, but some other crypto stuff thrown in there as well. We'll see where the price of Dogecoin is, and we will see how everything else is going. Until then, I hope you are well. And again, give a like, subscribe if you haven't already subscribed. I always appreciate the support. We'll see you next time.
Dogecoin, which started as a complete joke, has like skyrocketed to not a joke anymore. It hit an all-time high of almost 10 cents yesterday, but it was so minuscule you wouldn't have understood why you have millions of shares.
Didn't Elon tweet that too?
And arguably, the most entertaining outcome and the most ironic outcome would be that Dogecoin becomes the currency of Earth in the future.